Okay, good morning, everyone. Welcome to this live intraday strategy webinar with SB Trade Desk. I'm Michael Boutro. It's good to be with you guys this morning. It is Tuesday, January 12th, and we are on the onset of, again, another dollar rally. You're looking at the dollar index right in front of you here, guys. Broader performance still has the dollar boding pretty well today. Biggest gains against the sterling, which is down 0.8%, Kiwi down 0.26, and the euro with about 2 percentage points to the downside. Biggest gainer on the session, Loonie up 0.24, and the Aussie. This is the one that we've been following. So you might have noticed that a lot of the crosses we've been talking about on the intraday side are away from the dollar. And I think that's warranted at this point. You're getting a lot of nice plays on there. Keep in mind, specifically with some of the euro crosses, the ATR is rather large. So make sure we're using some prudence on that front. Eileen, good morning to you. Great to see you. Mark, Christopher, Alberto, Gary, Graham. Great to see you guys here in the room. All right, so as always, I want to encourage you guys, if you have any questions or trade setups, please feel free to throw them on the message board. As far as event risk is concerned, we don't really have too much on tap today. You do get Jolt's job openings at 10 o'clock, but I'm not expecting too much out of that figure. The real major U.S. event risk this week, guys, isn't really going to come until Friday with that retail sales data. That being said, we do have on tap tomorrow night the Aussie employment report, and certainly we'll take another look at the Aussie in tomorrow's webinar right ahead of that release. But it's going to be a light week for data. All right, Mark, EuroCAD. We'll take a look, my man. Let me jot that down for you real quick. All right, let's jump through these. First things first, let's go over last night's update. I wanted to keep with the theme of Aussie yen. We've been tracking this one for some time. The last update we did was on the 6th of last month as we were continuing to favor the downside move. Coming into last night, okay, or coming into the start of this week, you've come into some pretty critical support near term. And that support is basically defined by the 1618 extension from the decline off that December high. And then you also have a longer dated 786 retracement at the 81 handle just below. We came right into that, and you saw that hold into close of yesterday's trade. So the risk, as far as it's concerned for the Aussie yen, is for a little bit more of a rebound off this region. Remember, we're just trading a bounce within a broader downtrend. And I just want to use that as a word of caution. Not the time where you want to start loading up for a broader reversal. We do not have the conviction for that. It's just a bounce within a broader downtrend. So we have been pressing the longs on this one, actually, and it's been working out pretty well. Here's what Aussie yen looks like on the 30-minute. So if you recall from yesterday's report, the near-term bearish, or bullish rather, invalidation level was 81.45. It's exactly where we found some support yesterday. Okay, so there's where we were, looking for a pullback to buy, and we're eventually looking for a break of this trendline resistance to get the upside bias. You pulled right back into support. Okay, and there is actually a pretty decent trigger here if you're open during European hours. I think I was right around 3 o'clock in the morning here in the US, 4:30. You saw that break to the upside. Really, really nice rebound off of a critical support. 81.45, by the way, is just the low close for the year. So again, if I bring it back to a daily chart, you can see the close that we made back here on the 8th, 81.45. Okay. And that's what the near-term bullish invalidation is. And we're going to continue to leave that right there. A couple of things I do want to note. You're seeing a broader turn in momentum coming from oversold. This is the highest push you got into overbought condition. On the way back, holding 40 support is good. So a break of the top side here would be an objective break of the weekly opening range. And if we mount 60 again on that stretch, we'll look for initial targets at this median line, but more importantly, at that 83.67 level. And again, if you go back to the daily chart, that 83.67 level is pretty big. Pretty big. You have former channel support, the 100% extension of the decline, and the 38.2, just a basic retracement of that stretch. So the levels are pretty clear. I do think Aussie yen has a little bit more to go on the upside before we start to attack the shorts again. That being said, look for a stretch into 83.66, 83.68. Near-term bullish invalidation remains unchanged at 81.45. Any questions on Aussie yen before we get started? Nice healthy ATR, about 31 pips is the sweet spot, what we like to use as our profit targets per scalp. And the triggers look pretty decent. And Christopher Hudson says, can we please look at Kiwi, Sterling Key, and Euro Dollar? Absolutely. Let me write those down real quick. So this is Sterling Key will definitely took out. I was actually looking at that earlier today as well, Chris. And Euro, right? Gotcha. And Euro CAD for Mark. Okay, let's see if we can get through these. All right, Aussie Yen, still one of my favorite scalps, and we'll continue to track this one. I'll give you an update tonight if there's any change, but as it stands right now, the levels are unchanged from last night. Moving right along, yesterday's secondary piece here was on the Sterling Key. Christopher, that's exactly what you're looking for. Craig, I got you on that. Let me jot that down. Sterling Key, real quick. Listen, it was a beautiful play. It actually panned out really well. So we came into this key region of resistance. And again, you know, I never like to take fibs on their face value as important or critical just because they're fibs. But certainly when you have an overlap of multiple technical factors like this, it adds conviction to the trade. So a basic 38.2 of the stretch from the November high gets you at 223.18. A 618 extension from the decline off the highs that you made in September takes you to 222.80, and a basic 50% retracement of the entire, almost the entire 2015 range takes you into 223.10. Okay, it's exactly where we found resistance on this rally off of a critical support. And this was the big support we closed last year at. If you guys remember, we were talking about this, my favorite trades, confluence of 100% extension off the high, 618 retracement off the low, and there's the response. So at its face value right now, we're simply coming off resistance. We're looking for short triggers immediately below that 223 handle. Here's what the scalp looked like, and here's what it looked like last night. So we were looking for this consolidation just below that key region of resistance we just talked about. I didn't have all of the fibs here, guys, because they go way back. So just know 223.18 to 223 is really the major resistance barrier on the daily chart. And we were seeing this consolidation. The opening range for the week was taking shape just below this. So we favored a downside break. We noted that we were looking for that downside to give us the break. Initial targets of the break below 221.34 would be this key region here, and that's what we're testing right now. That's basically 220, 220.16 or 220.12. Basic 38.2 and a longer dated 236 off of the highs from November. All right, so nice downside stretch here. I don't want to get too aggressive. Again, we might have some more upside to go on this pair in Sterling Key. I do think that inevitably you look to buy this pullback for another stretch into the highs. But long story short, the immediate bias remains weighted to the downside, looking to sell rallies below 221.38, 221.34. And the bearish invalidation level needs to be at that same high. So as long as we stay below this region of resistance, you want to be selling rallies near term. Now, I do want to put a caveat on this. Excuse me, I'm losing my voice. If the markets do move forward with what our expectation is, so Jamie's going to be with his midweek webinar tomorrow, but ahead of that, you know, we're looking for a broader, little bit of a reversal recovery in risk. That's both the S&P and that's both all risk assets. And as such, you might see this a little bit hesitant to do anything aside from kind of hold this range. So near term, risk is to the downside below this. Key support remains 214.35. Key resistance remains 223.18, 223.16. So this is the range you want to keep in focus here. Who was this question for? Chris. Watch this range with intent. I do think that the broader downside bias remains in play, but near term, you want to get below that 220 to really get some more further shorts on this trade. Again, if you put a pistol to my head, I would say this would probably rally back into that former support, the monthly open or the weekly open, and then you'd look for some short triggers up here to try to see if you can get that downside stretch. All right. If we make it through 223, forget it. We're going to continue to favor the long sides there on Sterling Key. You'd be looking for the 200-day moving average and basic channel resistance. Any questions on yesterday's Sterling Key setup? Panning out rather nice. And again, the focus and the risk is lower against that 223 level. Eileen says, Mike, what's your 228.51 pink line? 228.51. Where do you see that, Eileen? Was that on the daily chart? Daily, she says. Okay. I think you're talking about this one? 228.51? Yeah. So this is the December open. So the December open trade, basically the November close, the December open was right there. It was an exact confluence, or is an exact confluence, with the key 618 retracement off of that decline. So again, Eileen, monthly opens, weekly opens can sometimes tend to be very, very critical areas of support or resistance. Does that make sense? Eileen says, okay, thanks. Chris says, okay, makes sense. I was leaning the wrong way, was looking for longs for a break. Chris, on this, yeah, so look, I do think the rally can make a new high, Chris, but as it stands right now, you came to a major critical resistance region. So I would be expecting for this to give us a little bit of a pushback. I do think inevitably you might look to buy that to make another high. We'll have to see what the momentum picture looks like and where we find support. But immediately, the risk is against this region for a little bit of a pullback. I do think we make a new high in this before it's said and done this month. Maybe another probe into that 200-day moving average and then turn around. But right now, that's the major ceiling I'm looking at. Christopher says, no, you are right. Trade what price is giving you instead of what you want. Yeah, it's a good motto to live by, Chris. The markets don't really care what I want, right? I can sit there and wish and hope. If we're not going there, we're not going there. All right. Are there any other questions on Sterling Key before we move off? A really nice pair, guys. I just want to preface this. If you're newer to the strategy or if you're newer here in the webinars, just use some caution. This is one of the larger ATR trades that we get into. So a quarter of the daily ATR is still yielding about 60 pips per scalp. So certainly, if you're just getting started, might want to start with something a little bit tidier as far as the volatility is concerned. All right, so those are the two setups from the intraday update. Let's go back to the intraday page here, and we'll see what the radar charts are yielding. All three of these pairs were highlighted in the previous intraday update, and all of them are still in play. Now, a lot of them are kind of losing a little bit of steam here, but let's just take a quick look. First things first is Aussie Dollar. Back on Sunday night, we were talking about Aussie and the fact that it was coming, or it broke some major key levels. The only thing I don't like about it is kind of where it found some support. So on the daily chart, the only thing you can look at here is basically the September swing lows from late in the month. Near-term key resistance is 70.37. That hasn't changed. And we looked early in the week. We talked about the fact that we were coming into the lows. This is the first low that we got. Back in late September. You saw a little bit of a rebound there. On the pullback, or excuse me, on the rally, we came right into that key resistance, 70.30, 70.37, pulled off. Here's where we were trading yesterday. And we said, look, bullish invalidation remains at 69.36. As long as we stay above that, we're going to continue to favor the long side. Well, that's exactly what happened. The thing came right into that region, came right into that 69.33 level, quick dip below 40, and a quick recovery back to the upside. And again, this is a pair that had a decent trigger early in European trade. All right. As a disclaimer, again, also, if you're following on the swing side of trades, swing trades are also holding along at this position. They got triggered on the way down last night, so you're already long. Near-term resistance and the critical region that you need to get through is still that 70.30, 70.37 level. You still need to get through this. If you do, you'd look to see this formation stay in play, and that would shift the focus back up to the upper median line parallel. That coincides with the, with the 618 retracement later in the week here. So it's a slow process. These bottoming processes are never easy, but it looks so far like you could be making a little bit of a rounded bottom here. Quick recovery in the Aussie alongside risk, and then we'll look to get back on the short side again. So no changes to the Aussie level. Still looking broadly for long triggers while above that 90, excuse me, I keep saying 90, 69.36 level. Still looking for long triggers while above here. Just keep that highlighted here, actually. Depending on where we are in time, you might want to move that up to 69.65. We'll see. Basically, we're looking to stay constructive while within this formation. Buying pullbacks, long triggers, looking for that break above 70.37. Any questions on the Aussie? And certainly, guys, if you want a little bit more background information on the Aussie, feel free to click on that Aussie hyperlink, and that's going to go to the most recent Aussie report, in which you'll be able to get not only the daily charts, the scale charts, but also the previous 30-minute. Chris says, thanks for helping me there. Hey, you're more than welcome. Eileen, you're more welcome as well. Mustafa, good morning to you. How far pullback waiting for longs in Aussie dollar, Eileen? So the Aussie dollar long, again, from the swing side of things, Eileen, that long we issued last night. So you would have probably been long already if you were following the swing trades. From here, I would actually love to see another run to 69.65. Eileen, if we pull back into here again, stop against the low is going to be really tight and beautiful. And you look to see if you can get that long trigger back into that key region 70.37. If you're holding long positions, guys, as you get into this region, it's worth it, in my humble opinion, again, to take a little bit off, bring your stops to break even, and see if you can charge the break. There is Aussie data, significant Aussie data coming on tap tomorrow night, so I just want to keep that in mind. Does that make sense? Eileen says, okay, I see that. Thanks. You're more than welcome. Cheers. One other thing. Just let me look at this real quick. Okay. That's going to get messy here on the charts if I leave it, but just want to show you a little bit of a range resistance there you might need to get through before attacking that 70.37 level. Mark says, looks like all commodity currencies are getting stronger. Well, man, they've been beat up pretty bad, right, Mark? Not surprised to see a little bit of recovery here. A lot of people really fall in love with the biases, guys, and I want to just put that out there right now. Even some guys on the desks in New York, I've been talking to a couple of buddies of mine, they tend to fall in love with these trades. Remember, we just had a massive risk sell-off, right? You're going to get a couple of days of recovery. The market's not going to keep doing this and just go straight to hell. So, yeah, you're going to see some interruptions. I wouldn't be surprised if the S&P today goes for a tag of 1965, 1969. Wouldn't be outside the realm of possibility. And it wouldn't change the broader structure. So don't be too surprised. By the way, looking at the S&P right here, I might as well talk about it real quick. This is an exact 1618 extension from the decline off the December highs and an exact 764 off the swing low from August. Dead on confluence. We rebounded off it perfectly yesterday. So yeah, we could get another shot to the upside. I'd be looking for shorts against this region. Inevitably, we are looking for a broader downside break in risk. Near term, it remains vulnerable for a little bit more of a recovery. All right. Good point, though, Mark. He says, haha, true. You got it. And oil, right? He's saying oil as well. So here's what U.S. oil looks like. Sorry to segue, guys, real quick, but some good trades we're looking at here. I just wanted to point out this sliding parallel that we noted yesterday. It looks like it closed right below it. We had a soft target at 31. I can't remember what that level was. 31.39. Kind of probed right through it here, but pretty clean. Pretty clean still to the downside. You might see a little bit of a recovery. I'd be looking for resistance. In this region right here. 50 would be those lows from earlier in December. That would be really nice. And 618 would confluence dead with the median line parallel. So bearish below this region at 34, 38, 35, 32. As far as downside targets are concerned, I don't have any. So not something we'll be scalping anytime soon, but something we definitely like to take a look at as far as just gauging what the commodity block is doing. All right, moving right along. So that is the Aussie dollar. Any questions on Aussie dollar before we move on? And remember, just tagged our bullish invalidation level and bounced. We're going to continue to leave that bullish invalidation level unchanged. Topside resistance, 70.37. Okay, next up on tap was Euro Aus, probably one of my favorites so far this week. So Euro Aus looked like this last night. We warned about this as we were heading into resistance on Sunday. It was a big region, 157.66 into the 158 handle. You had a huge confluence of major, longer, and near-term Fibonacci levels. And you saw here that the decline really gave us a nice downside thrust. So from here, where do we go? Here's what sterling, or Euro Aus rather, looks like now. Again, you can go here and click on the previous report to see what the daily chart looked like previous day. Okay, we were just tagging that 58, 57, 58 region of resistance. And we're looking to play downside immediately against that. Key support, still 53. And as long as you hold above 53, the broader trade is constructive. Here's what it looks like now. So you came down. You saw a topside break of that near-term channel. Oops. Okay, 156.33. You inevitably got it. We're looking to stay bearish below this, right? So you got a quick probe of our bearish invalidation level and a breakdown, a quick false break above 60, followed by a trigger break to the downside. So it was a little tricky here. I wasn't awake, but if you were trading this in European trade, you might have gotten fooled on that breakout above our near-term bearish invalidation level. But then again, quick recovery here took us right back below. So essentially at its face value, guys, the only thing I wanted to highlight here, and I think the best move is yet to come for Euro Aus, is the fact that we've set a simple weekly opening range just below key resistance. Okay, so if we're looking at this at an objective opening range play, you'd be looking for either a break of the lows to get bearish against the high, or a break of the highs to get bullish against the lows. Our favored move is for a correction lower. Okay, so you'd be looking for that break finally below support at 54.58 to open this up. Keep in mind another larger range ATR, about 51 pips per scalp, and you'd be looking for targets at 53.84, 53.45, and then the 52.90, 53 handle would be right down here. So still hasn't given us the conviction bias, but we're looking for a downside break of the weekly opening range. Key resistance is still a 58 handle. Any questions on Euro Aus? Nice volatile pair, really wide ATR. On this Euro Aus trade, also one other thing that we want to do, now that we've gotten the conviction of some sort of pushback off of that key resistance, we have structure, a wave here that we can use to kind of give this thing some, or define the decline. If you take a quick pitch or median line formation, if we draw it properly, you can see it looks like we're actually, yeah, not bad. Actually tracking price pretty well. You know what? I'm going to use that. So we're going to go ahead and get rid of this channel. And we'll work with this pitchfork from now on. And that highlights keeping a downside bias near term below this region right here, 56.33, which was yesterday's bearish invalidation level. We're going to keep that bearish invalidation level at the same mark, 56.33. If we break above 56.33, you'd be looking, you could probably squeeze out a couple of scalps, guys, towards that upper major key resistance zone. But this, again, is where I'd start to look for additional short exposure. And this is what the broader shift would be. If we break above this, you're looking to buy pullbacks towards that 88.6. That takes you into 160.32. Way up here. All right, so the game plan is clear. Looking for short triggers sub 56.33. Really need to get that break sub 54.58 to confirm at least a break of the initial weekly opening range. And that, my friends, is Euro Aus. One of my favorite plays. I've been in and out of this like 4 times already this week, so we'll see if we can get some more scalps off this one. And again, keeping things in context, right? We're only playing a little bit of a reversal within the broader uptrend. So we'd be inevitably looking to buy this pullback towards 52.60 if we get that low. All right. moving right along. That is your Aussie dollar, Euro Aussie, Euro key. Looks like this. First things first, the daily. This is one of those trades that just exquisitely clean from a technical standpoint. You know, the reaction that we got yesterday was really welcoming. It was very encouraging. I know it's a larger range, but again, a little bit of a larger range ATR here as well. You're looking at 167.50 into 168.40, almost 90 pips, guys, but such a big major region of resistance. Within the confines of this range, you have the highs that you made for July, the pivot that you made for August. You also have the 100% extension from the decline off of the December lows, the 100% extension from the decline off of last year's high, a 38.2 of that range. And on top of all of that, guys, you have the 100-day moving average and median line resistance, all in this region of about 90 pips. So it's really, really critical. And again, another one of those Euro pairs that are coming into resistance, just like Euro Oz did, gave us a really nice downside move. This hasn't really followed through as much, right? So one of these guys is lying. We'll definitely want to be very light as far as that's concerned. But from a near-term perspective, here's what Euro Key looks like. And here's what we looked like yesterday. So the pair was just coming off of that major key resistance, 68.40, 67.50. You saw the pullback come into support. This is a basic trendline support dating back to the low we made on the 5th. You can see 1, 2, 3. I wouldn't call that a fourth, but here's the fourth tag. So consolidation just below resistance. If we do get the downside break, you'd be looking for targets down here, 164.36, 163.83, which if I'm not mistaken is a former pivot. And then 164.35 would be a 38.2, or excuse me, 163.11 would be a 50% retracement of the entire move. So broadly speaking, looking for short triggers below this region. Again, on this one, might be prudent to try a pitchfork. Let's see what it looks like. It's a little tight for my liking. It's a little tight for my liking, but let's work with this for now and see how it pans out. I'm going to go ahead and get rid of the previous channel. And that highlights sort of some near-term targets down here. Let's just see where the weekly open was. Open was 66.30. Okay, so guys, why don't you go ahead and take a snapshot of this? This is what we're going to use as the amended chart for Euro Key. I just had to do update to take into account that new price action that we just got. So put some clarity here. If you get above the weekly open, which is a nice pivot in price, 166.30 as is, you're looking for a rally back into 67.40, 68.40. But again, key resistance, critical resistance. Long story short, we're looking for a rally to sell here below this level, a downside break, and the targets are unchanged as far as the south targets are concerned. Any questions on Euro Key? Christopher says, which do you like more, Kiwi long or Aussie long? Both seem supported. You know, I haven't really been messing with the Kiwi. I guess let's take a look in the Kiwi. Someone was asking about that earlier today. Was that you, Chris? Here's my take on the Kiwi. I don't have the technical clarity on Kiwi as much as I do Aussie. I've been tracking Aussie really, really closely. Kiwi dollar is a little bit of a different animal. My personal opinion is I still like the Aussie, but Kiwi looks like it completed a full 786 retracement from that advance off the November lows. I just don't have any structural sort of conviction on the decline. You know what I mean? I can adjust this to the high that we made here, where it should be. But that basically puts you at a support confluence, former basic trendline resistance, the 786 retracement of that advance, current lower median line parallel, all show up right around 65 or just ahead of that 65 handle right here. So Chris, I mean, if you kind of put a gun to my head, I would say, yeah, this thing probably has some juice into 66, maybe even the median line, but the broader bias is in play. So I'd be looking to sell those rallies. Downside break, I'd be looking for 64.55 and 63.90. Equidistant sliding parallel from that fork looks good. On the short side, you're talking here, Chris or Mark? He's talking about for the long, right? Right. So, Chris, this is sort of what I'd be focused on. Let me show you the scalp chart real quick. Don't have too much on that. It's the same exact formation that we just moved here. So, looks like you got that confluence, a little bit of a rally or a little bit of a bounce, I would say, but looks more like a dead cat bounce to me. I would need to see a little bit more conviction on turning this over. Don't forget, a lot of these, dollar pairs, whether it's the Kiwi or Aussie, a lot of them were putting in some serious divergence into those lows last week. Price action, lower low, lower low, lower low, higher low, higher low, higher low. So I am expecting a near-term rebound or recovery. He'd be looking just for that median line parallel right there initially on that move. Mustafa says, how about the euro dollar on the long side? Same kind of gig. I don't want to fight the euro dollar just yet. That just came off of pretty big resistance. Let me take that back to the daily. So Mustafa, this was a pretty big level. This is a 618 retracement from the decline off the December highs. It's also the December high day close. If you look at the December high that we made on the 14th, the reversal close ended up at 109.24, and certainly the 618's at 109.25. We probed through it last week and early this week, but on a close basis, rock solid, rock solid. So for me, I think you need to get a little bit better of a pullback here in euro before you start to look on the long side. But you want to stay constructive of 70.33, nothing 107.33. Nothing's changed on that front. I just think you might have some more downside before this thing pops off. Make sense? So here's the euro dollar scalp. As a reminder, again, if you're newer to the room, guys, you can take a snapshot of any of the charts you see presented here by just clicking on that camera in the top right-hand corner. Feel free. In fact, you might want to on that Euro Aus setup we just altered, you might want to just take down these levels again for your convenience. And Euro key. We set up some new levels on both of these just now. In the 30-minute Euro dollar, there is a 618 retracement and equal leg confluence looks somewhat clean on Euro 30-minute. Let's take a look. So here's the 618 retracement. I'm not sure, is this the extension you're looking at? Right here? Chris, I think that's what you're looking at, right? So yeah, you could work that argument right here. You got the 618. This is a longer dated extension here in blue, and the 618 here. Yeah, I wouldn't really mind this one too much, in my personal opinion, Chris. I wouldn't stick with that 618 just because of where it is in price. Look, we don't want to ever just blindly follow fibs. If we have to look and see that, uh, the price action has given us some sort of reaction off of that level previously. So the 618 is the 618. Always want to leave that. Right now, this confluence has already given us justification for a bounce, right? As momentum is holding 40. So I have a little bit more conviction of this support. If that breaks, I'd rather be working with just a basic retracement. I don't have enough conviction that this is an actual wave pattern of magnitude to measure it. Um, that said, I mean, we're looking at a basic support structure here at 109.39, 109.32. He says, no, sorry, I was using a different anchors. No worries, Chris. No worries. At least we can pick out the mistakes and find out where we went wrong. So I'll be looking at this euro. Very interesting. I don't want to advocate this just yet, but just give me a second again, guys. I am looking for the euro to actually find some support and bounce higher here. I'm just looking to see where that support might end up. Okay, so everything that we've drawn so far really highlights that you need to see a break back above 108.80 to get this thing going. Near term, you might get a pullback a little bit more towards what 108 level, but that's where I'd sort of be looking again for entries and for a topside break above 108.80. I think that's the conviction we need to continue favoring the long side. Does that help on the euro dollar for those of you who asked on the euro? Again, swing trades are holding long. Stop is at 107.92, so they got some room. But broadly speaking, I do like this higher above that 108.90 level, that 108.9 level, basically 618, 618, and the median line here. Mustafa says, thanks. You're more than welcome, sir. Good to see you in the room, as always. Chris, I pulled them from the 15-minute chart. I have the 970 high, the 870, and then 910 equal legs. That matches the 618 retracements. 970, 870. Okay, and then the 109.10. Yeah, so this is way too short, Chris. For my humble opinion, this is way too short of a pattern to actually measure two equal legs down. If anything, it would be something like this. What I just showed you would be a little bit more of a conviction trade. On that measurement that you used, I would use something like that to get the initial low. So let me show you how I would work this out. If I had suspicion that this thing was turning over, right, Chris, and I want to find a downside target of where the market may find some support, and let's say I do your fib here, right? This fib ends, or at least from my standpoint, the way I would use this is it ends here. The 618 held, the 618 held, the 618 held, rebounded. Now you have a broader wave structure that you want to give some respect to. And that holds merit. Why? Because look on the way down what happened, as if it wasn't even there, right? So this extension would work, but it would work for this target. Once that target holds and you see it hold and another rebound higher, now this is the new wave. So we can get rid of this and work with this. Does that make sense, Chris? We want to be dynamic as the market is moving and giving us a new high and a new low. You want always your levels to be adjusted to reflect that. So I get you on that first extension down for sure. That's something I would have looked at. But once we bottomed at that 618 and saw another rebound, now I have a wider extension to work with. So Chris, hope that helps, man. And again, euro dollar. I do like a turn here, just like we were talking about in risk. I do like to see this move higher, but we'll need to see support hold at that 108.09 level. Okay, let's go over EuroCAD and Aussie CAD. Those are both questions that came up. Hey, you're more than welcome, Mustafa. EuroCAD, I think this was for you. Very helpful, he says. I appreciate that, sir. what am I looking for? What am I looking for? EuroCAD. Aha. Mark says EuroCAD divergence on the daily. Yes, sir. Absolutely. So price action making a higher high, the oscillator making a lower high. Remember, these divergence signals, the stronger they are, the closer they are to 50, actually, the stronger they are. But keep that in mind, that divergence doesn't necessarily tell you on timing. You could have divergence going for days or weeks before it actually plays out. But he says, actually, there's a huge divergence on the weekly, on the close for EuroCAD, Mark. Let's take a look. Yeah. So you can see this divergence has been ongoing essentially since the peak that you made last year, like in August. Price action making equal highs. The oscillator making equal highs. Price action making a much more substantiated high. That is pretty big. Oops. Okay. So let's see what this looks like on the near-term chart. EuroCAD. Yeah, so even on the daily chart, you're getting some divergence, or on the 30-minute rather. Price action higher high, higher high. I wouldn't necessarily call that a higher high, but it's there. Series of lower highs in the oscillator. Tag that up. Nice resistance. That's spent. Excuse me, guys. Just going to update this on the fly for Mark. I like it. I like it. So it looks like momentum is waning on a move like this. So we were talking to earlier, Mustafa for the extension. On a move like this, I'd want to measure this move for sure, just to see where it takes us. And the 618's up at 57.33. So if we do see a break here, that's your next target. That being said, you're simply just testing the highs. The only thing I don't like about this pair, it's a nice healthy ATR. You're looking at about 50 pips, 48 pips per scalp. The only thing I don't like about it is that the oscillator has been all over the place. So to try to get triggers has been difficult. If you look at this last week, basically the oscillator has been skewed ever since that initial really crazy run up that you saw in early December. It's been really hard to get any clear-cut triggers on this. So you'll want to focus into a little bit tighter of a near-term time frame to get those triggers. As it stands right now, I think you're right, Mark. This thing's at risk below 55.62. Just for a pullback, though, I wouldn't get too aggressive on it. With what the CAD's been doing on a one-way street of depreciation there, I really wouldn't want to fight this trend too much until we get a little bit more conviction over turnover. Definitely something to keep on the radar, though. Mark, I hope that helps on Euro CAD. We also had another question here on Aussie CAD. If I'm not mistaken, someone was asking about that. Thank you for the levels. Hey, anytime, Mark. Always a pleasure, my man. Aussie CAD, interesting pair. Let's see what that looks like. Oh, this thing, right? Yeah, I was looking at this earlier on the open of on Sunday. Look, I just threw it out there at Jamie that I think 98.40 was going to be a decent level. It sort of came right into that and bounced. From here, honestly, I think you see a little bit of push higher than another break to the downside. I don't know if that's going to be a function of CAD strength per se, because we are a little bit more of a constructive bounce on the Aussie right now. So I don't have a clear-cut trigger for you. Here's what the Aussie CAD looks like on the 30-minute, and this is the only thing that I was looking at that may be of merit for you here, is the Aussie CAD coming into a basic 236 of the advance. It broke channel resistance on the downside. You'd look to play a recovery, 2 equal legs up as it stands right now. Would take you like into 101.05. Okay, so this is a pretty big pivot in price here, this zone. So I'm going to go ahead and highlight that. And this is the November high. Okay, so I'm not necessarily going to stress that, but we might as well leave it there as a soft target. Actually, much cleaner this way. All right, these are the levels I'd be looking for. For who was asking on Aussie CAD earlier in the session, here is the levels that I'd be working at on the near term. First things first, you're looking at a confluence right around 99.54 into 99.60. Aside from this being some longer term fib of the advance and a shorter term fib of the decline, you're also seeing that price has given us clear-cut conviction on this pivot. Resistance, break, support, 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 break, resistance, resistance, resistance. Okay. As far as the structure of the advance, something like this just looks like it's going to be too sharp. Could be in play. Oops. And that would highlight, ooh, it's really clean on a breakout type of play, this region right here. And let's just see what the low was. The closed low is exactly 98.45, so right on that level. So we'll leave that. 98.45 or so. Okay, those lows. That's the new setup I'd work with on Aussie CAD. Hi, Mike. Would you be able to look at the abomination? I am right in saying intraday range bound between 117.20 and 118. Gary, sure will. Sure will. We're running a little low on time. I'll definitely take a look at the dollar yen. Any questions on this? So for the guy, so for whoever was asking on this, guys, if we do see a topside break, objectively, aside from what Mike Boutros thinks or anyone else, it's a break of the weekly opening range. Such a scenario, you're looking for 99.95. More importantly, that key confluence right around parity. Okay, I'm going to keep the, on this trade, I would like to put the bullish invalidation level at today's European low. If we break below that, it kind of invalidates the fork and the entire idea of the structural advance. You could just see a topside break of resistance, or topside break of this channel, run into resistance and move off. So this is sort of the pivot that we want to work with. If we do see the topside break, looking to stay constructive, targeting, like I said, 99.95 and that parity level. Pretty tight on the ATR, only looking about 26 pips. Aussie CAD's been putting in about 100 pips a day. So keep that expectation solid on that front. All right. Moving right along from Aussie CAD. That's all the questions I think I got from you guys. We went through them at a good pace today. Let's take a look at the abomination. Hey, Craig, you're more than welcome. My pleasure, sir. Gary, here's what dollar yen looks like on the daily, and then we'll jump into the 30-minute in just a moment. So the highlighted region that we talked about yesterday actually did get a perfect tag. That was the sliding parallel of the high, the late high from August, and the operative pitchfork we've been using since last year's May high. And both of those come in right above 116.50. Here's what the intraday chart looks like. So Gary's saying range bound between 117.20 and 118. So you're definitely in consolidation. I just want to see. Bear with me, Gary. This is going to get messy. Just bear with me one moment. Still keeps highlighting that darned same level. I was looking for a tag of this level yesterday. Didn't get it. And now that we're drawing this near-term pitch, again, the median line comes in the same region. So you're looking at like 118.30, 118.20, same region you're looking at, a little bit higher, Gary, as sort of the basic resistance that I need to get through to get some further topside play here. And I know these levels have been messy, but again, I just want to keep them for the sake of, or the fact that the market continues to rebound off them. I mean, look at the support break, support, break, instant resistance, support, break, instant resistance. So I really need to clear this topside threshold above 118.32 to get a bounce. I don't think the downside is completely done yet. I think even if you get a recovery, you look for that median line to give her some more resistance. And in that case also, Gary, I would be much more comfortable tacking on a basic retracement of decline. I just don't have enough conviction that this is a low right now. So I know this is a messy chart, guys. My apologies. Don't typically make them this messy, but we don't call it the abomination for no reason, right? Right, Gary? He says, okay, cool, thanks. Right, exclamation point, yeah. This is classic dollar yen. It's a classic dollar yen trap. Get everyone suckered in. So we'll see. I do think you can see a topside pop here. We'll be looking at this one specifically heading towards the end of the week as you get that last piece of U.S. data with the retail sales figures slated for Friday. But the risk is for a near-term recovery above 118.32. Downside break, I'm still looking for that tag of 116.50. We didn't get it early in the week. I was almost certain you were going to see this at least go for a tag, but you didn't. You saw basic channel support hold. And the channel support also converges on this region near term, which is another reason why I need to see this side break to start favoring a little bit more of a buy the pullback mentality. You're in the trend until you're not. I hate cliches, but that's the truth here with dollar yen. Okay, I think I've done all of your questions here, everything that I've jotted down. Feel free to jump in if there's something I missed. A quick look at some of the other ancillary trades that we'll be looking at specifically on the back of what's been going on in risk. We talked about EuroCAD briefly for Mark. Really quick, Aussie yen, still looking to maintain that topside play while above that median line, specifically 81.45 is still going to be the bullish invalidation level. Dollar index, you know, we talked about the daily earlier today. I didn't take into the 30-minute, but just a quick look, you know, same thing matters here. We have been unable to close above 12,193, 12,204, and that still is the challenge for the index. Now, this is the highest press that we've gotten over the last 3 months to try to get above this level. Keep in mind that on all previous 13 attempts, we've always closed below 12,204, which was the high day close for November. Okay, despite all those attempts, we haven't gotten one close above this threshold. So today is still going to matter, and I still need to see that today. Okay. Topside resistance, 12,205. Nothing's changed on that. If you look at the radar charts from a few days ago, they're still going to be the same exact levels. 250 is going to be a basic 100% extension, equal legs higher off that low from December. Coincides very nicely with a pair of median lines, both the lower median line parallel for a previous structure and the current operative structure as well. Here's what dollar index looks like on the 30. This is what we looked at yesterday's webinar on daily effects. If you guys were watching that, you're looking to see if we can find that high day close at 12,204. Here's the breach. So again, if we pull back and close above this, that'll be the first time we actually cleared this region, for a couple of years. Questions on the Dow Jones FXCM dollar index. You're in the trend until you're not, says Farouk. Very useful for bias selection. Yeah, I don't like those trader lingo type things. I feel like they're very I feel like there's a word in Arabic. I can't put it in English. It's like, you're memorizing it, but you're not comprehending it. And that's the main thing with these sayings, guys. A lot of people like throwing around, oh, you're in the trend until you're not. Trend is your friend, blah, blah, blah. But actually implementing that is going to be the hardest thing, right? So, Alan, I'm not sure what you have here, what your numbers are throwing out. 3662 at Kiwi. Alan, if you want to just give me some clarification on that question, I think you might have had a typo in there. Okay. Guys, we'll go ahead and wrap things up here. Again, as far as data is concerned, you're pretty light. You do get some data streams at 10 o'clock out of the United States, but I wouldn't be anywhat concerned about it too much. Alan says, sorry, I have a problem with my keyboard. No worries, man. Alberto says, this is my first webinar. Very satisfied. Thanks, Alberto. It's great to have you on board, man. And again, we look forward to seeing you tomorrow morning, 8:30 Eastern, same time. Hopefully we'll have a little bit more volatility in overnight trade. Watch the Asia Open, guys. 7, 8, 9 o'clock here in the U.S. Three-hour span is really where I'm getting the meat of some of these setups. So you want to make sure that you're trying to kind of be attentive to that. If you're trading London time, you still have the cream of the crop, my friends. So a lot of the setups that we've been looking at have been playing out specifically more so on the London Open. So keep that in mind. All right. Best of luck trading today, guys. Till then, we'll see you tomorrow morning. Cheers.